In this video, we are going to discuss about our next indicator, that is RSI. RSI is called as Relative Strength Index Indicator, which is one of the most famous indicator for the analyzing the stock. The RSI indicates the overbought or oversold situation in the market. It will not give you the trend, or it will not suggest any kind of entry or exit points. It's just a momentum based indicator. What is the RSI? I'm again repeating, momentum based indicator. So based on the RSI, we can decide, can we go for downside, or is it safe to make an entry or not. Now without wasting time, let's take an example here. As usual, you go to indicators, select the RSI. After RSI, just select it. You will get RSI band like this one. Okay, this band is RSI band, whatever you are showing, I am showing here. Now in the RSI, there are total two ranges. The upper line is 70 and downward line is 30. 70 represent oversold, and 30 represent overbought, below 30. Okay, overbought. That means if market is above 70, that means it's already oversold, so it does not make any sense to go for short position now. Okay, go for the short position now, or it's already oversold, unless and until market is again below the 70, then you can go for the trade. If it's above 70, in simple words, if it's above 70 or below 30, do not initiate any trade. That's what traded, or do not initiate any kind of investment. That's what this RSI is indicating. RSI is not indicating where to enter, where to exit. In some videos or in some blogs, you will see that what people are doing, people are making the trend line like this one. Okay, and they are entering based on this RSI. If RSI breaking this trend line, then they are making position at this one. But here the winning ratio is very low. In my earlier stages, I also tried this one. Okay, and I am losing money. I learned a lot of things by losing money only. That's why I don't wanted to do same thing with you, or I don't wanted to I don't want to teach you the wrong things. So the purpose is, do not make entry based on this trend line. After the trend line, you can make an entry. If you check here, see, after the breakout, market moved very good, right? Market moved very good, and in the chart also it moved very good. But trust me, in the live market, the winning ratio is very low. But I'm not saying that RSI is bad. RSI is really good index, really good indicator if you use it as a momentum based indicator. Means if RSI is between this trade, and based on this trade and based on the projection, you can make an entry. Okay, but if RSI is already indicating below 30 or above 70, so it's really dangerous to make an entry at this type of position. Okay, hope you got my point. RSI is pretty much straightforward, and if you are a trader, so always depend on the price action. No need to depend on the RSI. Okay, as a trader, I am not using RSI. Never use RSI as a trader. Never, in the sense, in fact it's your choice, but I'm personally not using the RSI as an intraday trader. Just use RSI to check in multiple time frames, like 1 hour, bigger time frame, better the result, 1 day, for the analyzing any stock, or if you wanted to do some investment or the swing trading for the 15 days to 30 days, something like that. So you can check RSI should be normal, about 30, or this is the normal range to buy or sell anything. Okay, hope you got my point, and if you understand the RSI, no need to worry if you're not understanding the RSI, because I don't think so this will make any impact in your trading career or anything else. It's depend on you, how you are viewing the market, or how you are visualizing the market sentiments. Okay, see you in the next video. Thank you so much.